Pick the right stock at the right time.
Hello and welcome. You're watching Countdown right here on Bloomberg Quint Live. After 7 straight days of losses, finally some respite for the Indian equities. The Nifty moves up over 0.5% to rescale that 10,700 mark. We'll tell you all about the internals of the market in just a few moments, but let's run you through the headlines. After 7 days of losses, the Nifty is heading into a final hour with trading with steady gains. The index is trading above the 100-day moving average mark. That's around 10,700. The Nifty IT index is the only sectoral loser in trade today. The index is now down for the 4th day in a row. Imami has gained the most in 5 years after the company's promoters sold 10% stake worth 1,600 crore rupees to pay debt. And Jet Airways lenders are working on a 3-part resolution plan that includes issuance of preference shares, equity sale and rescheduling of loans. That's a Bloomberg Quint exclusive. Good afternoon, Neeraj, and finally some green shoots for the markets.
Yeah, let's see how long do they last. But I'm glad, Devi, that the conversation that we are having in the morning about will this be the breaking of the 8-day losing streak? And it certainly looks like it would. Just the nature of the market and the nature of the move today suggests that it's very unlikely that we will come off in a hurry to end in the red. Never say never, but I would presume that if I was a betting man, I would bet on the markets ending in the green today. It's an easy call to make, maybe. The Nifty Bank has actually been the main pillar of strength today, over 1% higher, 303 points in the green. And the market breadth will just briefly come up on your screen, because in the past, this is of course the contributors list, but the market breadth in the past, on good days on the Nifty as well, the market breadth has not been positive. In today's session, it's a stark mirror image of what's happened. Just keep in mind though, we had a day like this last Thursday as well, and aside of that, or last Wednesday, and aside of that, most of the other days were topsy-turvy. So this, whether it's a flash in the pan move or otherwise, remains to be seen. Very quickly, the heat map, and just show you what's moving on the index before we talk about what's happening at the broader end of the spectrum. Same for IT, not too many losers. Yes, and NTPC is down, but TCS, Infi, Wipro, Techem, essentially it's the IT stocks that are sulking in trade. But look at the gainers. Commodity names bounce. ICICI Bank about 3%, SBI about 3%. Strong moves for Mahindra and Mahindra in the session today. So some rate sensitives are certainly moving up. So it's rate sensitives versus IT on the large cap end of the market. But the mid caps have a peppering of a lot of other stocks, which due to specific reasons seem to be doing well today, Devina.
Yeah, and we'll come to that in a few moments. It's just that the entire market breadth, like you highlighted, from the start of trade today has been looking promising. Let's see how the end of trade shapes up. We've still got a good 1.5 hours to go for trade, and you know, you can have it move in any direction. Let's take a look at the bigger movers for today. So you've got a Sterlite Technologies on the mid-cap index, which is up about 6.5%. Bank of India is doing well. Today is a session where you're going to see a lot of green for real estate as a pocket. So be it the mid-cap names, be it the smaller real estate stocks, all of them buzzing about in trade. The possibility of GST being brought down from 12% to 5%, you know, that's what's keeping them more and more active. Prestige Estates is up about 5.5%. Edelweiss Financial Services, finally you're seeing a move of about 5% in today's session. Yesterday, the stock was down in trade. REC, Jubilant Life Sciences are some of the other gainers. Amongst the losers, Indiabulls Ventures down 3.5%. Graphite, HEG continue to lag even in today's session. Dish TV loses some steam after the kind of stupendous run-up the stock has seen from levels of about 22. Rajesh Exports, Reliance Capital are some of the minor losers. Within the small cap index, which is up about 1% or so, you've got Bombay Dyeing, Shankara Building Products, Shrey Infrastructure and Finance. This was down about 5% yesterday, so it's up about 4.5% today. PVR has moved up too. Kaveri Seeds loses 13% in the session. You've got to the likes of an Equitas. Ipca Laboratories 1.5% given up. So no major big losers in terms of the quantum, except for Kaveri Seeds, which is highlighted. But the gains are more pronounced in today's session. But let's quickly look at what's happening in the futures and options space and what's buzzing about there. We've got Agam Vakil joining in for that. Agam, good afternoon.
Well, good afternoon, Devina. We're seeing a bout of short covering to a certain extent considering we are seeing benchmarks advance after 7 straight days of losses. So, we've seen open interest increase of as much as nearly 3% when it comes to the Nifty futures. The banking Nifty futures also seeing 3.6% increase in OI. This, of course, is towards longs. And as you can see, at least on the future side of things, Nifty Bank has reclaimed 27,000. But coming down to your volatility index, a further up move around 9.5% at around 18. So keep an eye on that one. And okay, so yeah, that is the updated version. It's at 17.7 because we've seen that volatility index come off to a certain extent. But moving on to your options data, again, because the fact that we are seeing the Nifty move back above the mark of 10,700, a little more writing around the 10,600 and 500 puts and unwinding in the 10,800 calls. And open interest distribution, of course, this keeps changing every day, but we still have some amount of support at around 10,400 and on the higher end 11,000. Very quickly to talk about stocks in today's day of trade, and some very surprising moves coming in through. So Kaveri Seed Company, however, is the one which is looking at a significant amount of weakness and a lot of shorts building in there. In fact, 58% added there. RB Infra is the other one, which is actually making gains on what we saw yesterday. Another 14% added in open interest towards fresh longs. We also have several other buzzers. RB Infra, of course, as we've already spoken about, and DLF is the other one which is also advancing in trade. And well, finally, we are also tracking a lot of change in Infosys, where the stock is down as much as 2%. It's not just Infosys, it's the entire IT pack in general, which is really under some amount of pressure. So on the whole, mixed cues coming in, save for the benchmarks, which are advancing in trade today.
Okay. Thanks a lot for that, Agam. So watch out for some of those specific stocks, and we'll talk about them between 2:30 and 3 with our trading experts too. But let's start the show with a fundamental voice, Vaibhav Sanghavi of Avendus Capital, Public Markets, joining us right now with his thoughts. Vaibhav, good having you. Thanks much for joining in. The last few days, Vaibhav, characterized by how the Indian markets have not been able to do well, and in stark contrast to what's happening to the MSCI EM pack, both on the equity markets front and the currency front as well. Now, today might be a day in the green, but do you believe the larger trend for now is on the way down, or is it difficult to pinpoint that right now?
It's extremely difficult to pinpoint, right? Because what we estimate is basically in the first 6 months of this calendar year, things are going to be volatile and extremely difficult to predict. While you mentioned about emerging markets, yes, we did see in calendar year 2018 fantastic performance of India in the whole emerging market basket. Currently, we are seeing exactly the opposite. India has been a relatively huge underperformer in the whole emerging market basket, at least from January 1. The reason being that we have elections, and probably people on the global front do not want to take a big call ahead of those kind of elections. At the same time, there are some amount of global issues as well which are going on. So that's where our underperformance actually is coming about. But as I mentioned, for the first 6 months of this year, it's going to be extremely tough to call the markets. Hopefully, for post that, we'll continue to see the sharp earning recovery coming in, and markets to recover henceforth.
Vaibhav, the last 4 days has not been particularly great for IT. This is in stark contrast to what these stocks and particularly the large cap names have done post-reporting their Q3 numbers. Now, most are of the opinion that because of lack of avenues to invest, and IT being the safer haven stocks, were the reason why much of the money went into IT. Are things changing materially, that you actually see the flow of money out of IT into anything else?
No, I don't think it's flow of money outside of IT, but what we do feel is basically that after a great 1.5 to 2 years of performance on the IT pack, and where the investing world was relatively under-owned in terms of the IT space, post that what we are currently seeing is that in the environment where the global growth is getting a little weaker, there are fears that the spending tailwind which we had earlier may turn into headwind going forward. Having said that, currency is still stable and probably in favor of those IT companies. So we do have some mixed data coming onto the IT pack, which makes us think that we should be neutral at this point in time rather than overweight or underweight.
Okay. Vaibhav, let me try and frame this question. If the macro situation around, due to geopolitics or otherwise, settles down in the next 2 or 3 months, and let's assume the markets don't deviate too much from these levels, they are around this 10,500 to 11,000 levels when the election and the macros, etc., die down. Would you be in favor of buying some of the beaten down pockets, or would you pay a premium for visible growth? Because whatever growth is visible is very expensive, be it on the large cap space or on the mid cap space.
So it's a great question, and just to term that, in the market parlance is, whenever you see volatility at elevated levels, you will generally see a shift from mid caps or small caps to large caps, in the hope that you will not find any big major tail risk in terms of their businesses. Having said that, once this uncertainty period is over, and if there is clarity in terms of what is the outcome of the elections post May and June, then my sense is basically that you will start seeing money flowing into the mid caps and small cap post that. But however, till then, as just a risk mitigation measure, people would be, or investors would be, largely focused on to the highly predictable ones, despite their high valuations as well. So don't expect that to change in the next 3 to 4 months, but post that, yes, I am with you saying, telling that you might see a shift in those kind of trends.
Okay. At Avendus, what is the call right now in terms of specific pockets that could see a greater upside by the end of the year? I mean, keeping in mind, obviously, the market volatility.
So what we are saying is basically that for FY20, the earnings growth should be pretty strong. Having said that, the street is at about 25%. We are saying that even if it comes about 15%, we would be extremely happy. What we also do feel that we have a higher certainty, or reasonably higher certainty of this earnings recovery to happen, purely because on a Nifty perspective, if you see, banking and financial space is at about 37% of the total weight of the index. And that is a pocket which we have seen huge amount of pain in the last 4 years, and we are at trough. And we do think that from here onwards, there can be some sharp recovery into their earnings. So we have a huge component into the Nifty, which is relatively strong and is looking, with a great momentum on the earnings side, going forward. At the same time, the other two important sectors like consumers and industrials are something which we are certainly keen on as well, looking at their growth prospects. So we do feel that earnings growth is here, and these three sectors are the sectors which will probably lead the next leg up in the next year.
Okay. One pocket in particular, obviously, has been the NBFC space, and we've seen how there has been a split in the kind of earnings we've seen for some of the NBFCs, be it the housing finance companies, be it the auto loan companies, be it the gold loan companies, consumer finance companies. Will the pain continue for them? Because at the start of the year, the expectation was that you don't expect much change in terms of the liquidity pressures to go away till at least mid-year. Is that something that you are also agreeing to, or do you feel that things have changed materially for them?
Sure. So in NBFC space, we have seen what's happened since September and the kind of pain which they have been in. This clearly tells us that investors should be looking at those kind of companies which are strong on the liability franchise. At the same time, there is not much of a larger exposure into the painful areas of an economy, something like a real estate. So we are concentrating on those kind of companies who are consumer facing, retail focused, and has a very strong liability franchise along with a huge technological backbone. Is something which we would want to have in a portfolio. At the same time, what we also do think is that there would be a substantial shift in the market share of NBFCs in favor of those whose balance sheet is pretty well capitalized. At the same time, as I said, is great on liability franchise. So we expect some stock performance within the NBFC space as well. Having said that, in terms of the liquidity, I do still think that there is scope of improving liquidity into the system, and which would probably aid the NBFC space on an overall basis.
Okay, Vaibhav, the final question would be on a space that is now, at least the jury on the space is split right down the middle, and that is autos. On all the counts, be it CVs, the argument is that yes, the sector is looking weak, but BS6 demand will bring it back. On the passenger vehicle segment, that once the NBFC challenges are over, which might get over in the next 3 to 6 months, those spaces will bounce back. For the two-wheelers, they also now have a large export element and therefore not just dependent on the local market, and those numbers will start looking okay. So there is a positive for almost all the negatives that the auto sector is going in right now. It surely can't be that easy, right?
Yeah, it's not so easy, but what we need to understand is basically, autos and within autos as well, each of the product cycles has its own, product categories have its own cycles. Maybe it's PVs or two-wheelers or CVs, which is the most cyclical one, but they work in their own, own cycles. And what we have seen in last 5 to 6 months is across the board there has been some amount of weakening sales numbers, and partly because of what you had mentioned about the NBFC liquidity as well. Yes, if that gets better, at the same time what we have seen from RBI as well in terms of reducing rates, and if there is an effective transmission which happens post those kind of rate cuts, you will surely see some amount of stabilization on those kind of demands. But hoping for those kind of sector multiples which were there at the peak is not something which we would expect going forward. Yes, the incremental positive numbers which may come on a month-to-month basis can improve the sentiment from here onwards in the auto space. But till then, my sense is to just be on the sidelines on this whole space.
All right. All right, Vaibhav, really appreciate you taking out the time and joining us this afternoon to share your views with us here on the platform. That's Vaibhav Sanghavi of Avendus Capital. Moving on, innovation and volume-led growth will be Nestle's core strategy for 2019. That's according to its MD and CEO Suresh Narayana. Speaking to Bloomberg Quint's Charlene D'Souza, Narayana talks about the company's margin outlook as well as its plans for the coffee business. Listen in.
If I were to, Charlene, summarize the one-line intention of Nestle India, humility to persevere and determination to succeed. And I think that hinges on the model of volume-led growth and innovation and renovation that will drive us and drive our energies forward. Now, this clearly means that we will have a strong innovation and renovation pipeline. Now, whether we come out with 5 new products or 10 new products or 20 new products, time will tell. Because what is important is that you not only manage what is new, but also you manage what you have. This clearly means that, and you're right, that our last quarter expenditure on A&P was higher by almost 370 basis points. That was a conscious decision to invest in on both the new part of the portfolio and on the existing part of the portfolio. So it was not an accident that happened. And clearly, if I am here to persevere and I'm determined to succeed, I am going to, along with my team, fire my best bullets in the direction of ensuring that success happens in the marketplace with the kind of resources and with the kind of brands that we have.
So we see your margins under pressure in 2019 because if you're looking to, accelerate your A&P spends, then your margins will be around the current range itself?
There is no reason to believe that one is compromising the other. Because let's put it this way, you've got a core portfolio. That core portfolio does generate a certain amount of equity and a certain amount of resource for you. And you selectively deploy this around the categories and areas and brands where you think the best growth opportunities are afforded. So one doesn't preclude the other. My going for an aggressive growth strategy or my going for an aggressive innovation and renovation strategy does not necessarily mean that I'm going to either decry or defocus on the overall profitability of the organization. I think both can coexist together. At times, in quarters, right, there is a possibility that one could supersede the other. That's when the resources at play will be put in order to secure our positions in the marketplace. Ultimately, it is fair to say that without growth, without increased penetration, without increased innovation and renovation, many organizations will either degrow or will ultimately cease to exist for a cause that is to do with themselves and to do with their own strategies.
Okay. So, it's known that Nestle put a very aggressive bid for GSK's Horlicks. But, now that has not gone through, what are your plans in India, to grow your malt business? You've tried with Milo, and do we see more emphasis on this business? Do we see other brands in this space coming from your end in this year on this business or any time in the future? What are your plans there in this business that you have outlined?
Shalin, obviously the whole area of malted food drinks is something that is interesting, and it's a valid space and it is a valuable space to be in. And we are globally leaders in this category, and we do have brands, we do have competencies, we do have technologies, and we do have capabilities. All of it ably supported by Nestle SA, right? So it is not that we lack the necessary will or the necessary determination to be in this category. All I can say is watch this space, and as time evolves, you will hear more from Nestle.
Okay, so the coffee market also isn't growing too well, and you lead in that market. Just to understand, India is not also typically a coffee drinking country. Are there plans to enter into tea, or what is your strategy to grow this market?
Well, it is untrue to say that the coffee market is not growing particularly well. The coffee market has had some pretty encouraging performance in 2018. And if I were to tell you that Nescafe in India, we are one of the fastest growing markets for Nescafe in the world. So it's not that there is a kind of lull as far as the coffee market is concerned. Yes, the headroom for tea is still distinctly higher, and but if you look around you, the kind of buzz that is happening on coffee is also exciting, right? Whether it is parlor coffee or ones that you get in cafeterias or the exotic sauce-based coffees. I mean, there is a lot of excitement happening in that space, and I think that is all good for coffee consumption. Albeit operating off a lower base as compared to tea, that will still remain the area of focus, because we are, after all, I think, I would say, the pioneers of instant coffee in the world. And I think Nestle has enough technology and enough brands across the world to be able to satisfy and also to indulge the Indian consumer.
Yeah, that's the management at Nestle talking about the future plans of the company. Moving on, and within the same space, Emami promoters have sold 10% of their stake in the company to a consortium of investors in a bid to reduce debt. The transaction is valued at 1,600 crores. Agam Vakil, he's standing by with more details on this particular block deal that happened yesterday where they sold out stake. What is the current promoter holding standing at? What are they going to use the funds for? Agam, highlight all of that for us.
Right, so to start off with, the promoter holding now stands at around 62.77%. That is after that the 10% stake was hived off for 1,600 crores. And of course, as the promoters have suggested that they intend to use a large part of this chunk to pair off.
Agam, I'm sorry, I'm not getting your audio clearly. So while we just wait for that to get done, let's just figure out Tata Motors, because that parent has bought more stake in the company from the open market. Yatin Mota is here to put that into perspective. Yatin.
So Neeraj, I'll talk more about the Tata Sons purchases which has happened in the past as well. But talking about the recent purchases, a total 183 crores pumped in, by Tata Sons into Tata Motors. They've bought a decent amount of 1.18 crore shares from the open market at a average price of 155 rupees per share, and these purchases happened between 11th of February to 15th of February. This is basically post the earnings. Remember, Tata Motors posted a consolidated record loss of over 27,000 crores, post with the shares slumped over 30% intraday. The shares clearly for Tata Motors are trading at multi-year lows. Probably, this was used by the promoter group, which is Tata Sons, as an opportunity to buy from the open market. Not only that, let's also talk about what they had done earlier as well. So starting with 19th of September 2017 to the period 2018, Tata Sons totally bought nearly 12.3 crore shares, and this was at an average price of 414 rupees per share odd. And if you look at the Tata Sons history of buying Tata Motors shares, that has not been going well. In fact, the purchases that I am talking about from a period of September 17 to December 18, the total mark-to-market on these investments which were done in open market cost a mark-to-market of nearly 3,100 crores. If you look at the today's price, which is close to 162 odd. Do not probably look at each and every signal of the promoters buying shares of a company as an opportunity to buy, because if you look at Tata Sons history for Tata Motors, that is clearly nothing to cheer about.
Okay, we'll keep that in mind. So that's, of course, with regards to Tata Motors. Now back to Agam for Emami.
Right. Well, so as I was suggesting that after the pair-off of around 10% equity stake in Emami, the current stake stands at around 62.77%. The reason why the stake was paired was because of promoters and the promoter group wanted to raise funds in order to pair debt, not in Emami, but in some of the other group companies, especially their assets linked to power and cement. And because of that, this actually has boosted the stock, because given the fact that these funds can be used in order to retire some of the debt, it may actually augur well for the health of the entire group. That said, in terms of buyers, we have SBI Mutual Fund, L&T Mutual Fund, Amundi, among many others, of course, which have bought into this particular stake. And once again, we'll be waiting and watching as to how the promoters use the remaining funds, that is after the debt has been retired, as to how they use the funds to move in and deal with the business.
Right, Agam, thanks a lot for that. That is a quick update on Emami and the stake sale that happened via block deals in yesterday's trade. Moving on, a subpar monsoon season in India may lead to a drop in sugarcane production in the country. A first in 3 years, that is. That in turn may lead to lesser exports, pushing up global sugar prices, which anyways are trading at a high. Atul Prakash of Bloomberg News is joining us for more. Atul, good afternoon to you. When we're talking about pushing up global sugar prices, are we already seeing a slight bit of an effect of that in the past few days? Because we've seen the global sugar futures getting pushed to about $13.15.
So this National Federation of Cooperative Factories, they have come up with their estimate for the next year. We had a record production in 17-18, and after that in 18-19 production fell. Next year also they are saying the production is going to fall and it is going to be below 30 million tons against record production of about 32.5 million tons. And the main reason they are saying that because of some adverse weather conditions in Maharashtra and Karnataka are forcing all these farmers to cut planting, and this is not very good for output, India's output. And the implication is that if there is a global sugar glut, and if India is a major producer, if India is producing less, that means that there would be less left for exports, and that is going to support international prices, which fell about 21% in 2018. So the world market is very keenly looking at India's situation and the crop progress, and this is something which will be in focus going forward.
Right, that's of course sugar, and that's what's probably led to some more fillip in the sugar companies today. Global sugar prices rising would mean that there will be some justification of the MSP rise as well, and maybe some money is coming into these companies. Dhampur sugar up another 7%, if I'm not wrong. At least the last time I checked in the morning, it was up about 7. Now currently up about 4.5. Balrampur at about 123 or thereabout, yeah, 123.35, and Dwarikesh and the others in the state of Uttar Pradesh are all gaining some ground. So, well, good days for the sugar companies for sure. And good days for real estate. The GST Council meets tomorrow to take a call on some crucial issues, including ways of reducing the tax burden on real estate spaces, the sector at large. A group of state finance ministers have already submitted the recommendations to the council. Sharad Dubey is here to take us through the details and why the index is doing so well in anticipation of some good news, Sharad, I presume.
Yes, Neeraj, there is a good news for the sector, and there is a positive traction seen over the last 3 trading sessions, which the index has increased by almost 3%. Now, if you see the stocks which have been rising over this news is basically Sobha, Sunteck Realty, and also Prestige Estate Projects, which have increased by more than 3% to between 6%. This is mainly because these stocks do have a high segmentation revenue coming from the affordable housing segments. Now, Neeraj, let's go and look for the GST expectations. The first expectation is, of course, the industry-led expectation of lowering the GST rates for your under construction houses. And to be specific, we had a chat with the market expert Arun Chitnis for Avendus Capital, and he pointed out that the first expectation would be a uniform taxation for both under construction properties as well as ready to move in properties. So basically what happens is all these taxation and legal issues come under one roof, and it also provides a single window clearance. The next point is definitely a boost for the affordable housing segment. So this will actually help not only the first time buyers to come in, but also for the developers to actually sell their inventory pile up, which we have been seeing over the last 2 quarters, and also if you can extend it over the last financial year. And at last, there's a revival of the sentiment, which is very important for this sector in purchasing the second homes. So this was actually pulled in when this news had come in in the interim union budget of tax ops for purchasing the second house. Now, Neeraj, what happens tomorrow will really be very important for the industry, whether it's a short-term stimulus or a long-term structural change. Back to you.
Right. Thanks for that, Sharad. That is the reason why some of, in fact, all of the real estate counters in today are extremely excited. The real estate index itself is up, I think, closer to 2.5%. In the morning session, at least, it was up 2.5%, and it still maintains those gains. In fact, just about inching higher. That's Oberoi Realty, which is now down, lost out a little bit. So 478 is where it's trading at. Bringing in our experts on the show, we've got Amar Singh of Angel Broking. He's joining us. Along with him is Sacchitanand Uttekar. Gentlemen, good afternoon to both of you. I'm going to start off first with Amar and his call on the index. We're seeing a little bit of a respite. We're picking back up from the lows that we had in yesterday's session. 10,700. How crucial is it that we maintain these levels?
I would say that looking at the index, what we can clearly see is that index is strongly supported lower around 580, 10,580, 600 levels. But again, on the higher side, if you look at it, somewhere around 10,740, 750, that's a crucial resistance for the index. And technically, if you look at the charts on the weekly charts, if you look for the almost last 8 to 10 weeks, in the index has been trading in a sideways zone. It was it did go up, but was unable to sustain. Because on the monthly charts, the index is not very, I would say, encouraging. It's not where the momentum isn't bullish at all on the monthly charts. So that's the reason we are seeing this consolidation, sideways trading, and I would say that till the time we don't see the index consistently trading above the 10,750, 10,800 mark, I would say that index is tied down. But yes, 10,580, 10,600. So you can roughly say that 10,600, 10,800, that's the level that index is likely to trade in. A breach below 10,580 levels could then lead to some sharp sell-off in the index.
Okay.
But for any significant rally, only above 10,800.
Okay. Sacchitanand, good afternoon. What is your index strategy for the day?
Well, good afternoon. I have a bit of a contradictory view. In fact, I'm expecting that market seems to be stabilizing here. If you look at the entire sequence of 7 days, markets were sliding down. Yesterday, we saw that this particular decline was restricted, and the market failed to go below its previous day's swing low of 10,620. If you look at the entire sequence, there was never a day wherein the markets closed below or above the previous day's close as well. So I think there's a very good scenario which is developing today. Not only that we have stopped this particular sequence, but I think on a closing basis, we may see a very good strong positive close. So probably we may see markets rebounding from here on, and we are expecting that we could again see 10,800, 810 levels very quickly. So with that intention in mind, we are advising our clients to deploy a bull call spread in Nifty. The spread has to be the current weekly expiry spread. 10,700 call option has to be bought in, and one lot of 10,800 call has to be sold against it. The entire spread is available somewhere close to around 40 rupees. The stop loss for the spread should be placed at around 23, and an expectation of around 70 to 75 could be there.
All right, just to put it into perspective as to what exactly this strategy entails, a bull call spread is employed when one expects a moderate up move in the security. In this strategy, a call option for an at-the-money strike is purchased, and another call option of a higher strike is simultaneously sold with equal quantity. That's the idea behind a bull call spread. Let's take a look at some individual stock ideas as well. Amar Singh, let's talk about your two ideas, a buy on Colgate, and you've got another call on Escorts. Both are buy calls.
Yeah, looking at, first I'll talk about Colgate. What do we see in Colgate on a long-term basis? On the monthly charts, the stock continues to be extremely strong. The momentum is also there, and weekly what we are seeing is that the stock has taken some very strong support, and even the daily charts, it has moved from oversold territory, taking very strong support around 1220 odd levels, and it has bounced back today. So yes, there is a possibility that the stock could trade higher because the longer term time frames, they definitely support the up move. So Colgate is a buy around 1245, 1250 zone with a stop loss of 1210 and a target of 1341 in the short term. And the second stock to look at is Escorts. So if you look at Escorts, what we are seeing again is that Escorts overall, we are seeing some consolidation on the weekly charts. There is bullish, I would say, divergence on the weekly charts. On the daily charts, however, if you look at Escorts, we are seeing that Escorts is clearly indicating that it is more or less forming a bottom. And so there is a possibility that the stock could move up. So a buy can be initiated around 640, 645 levels with a stop loss of 624 and a target of 682 in the short term.
Okay. Sacchitanand, what about you? Your strategies?
Well, since the intention is on the bullish side, we have both buy calls on our radar. One being the first one being JSW Steel. If you look at the overall formation, the stock has been maintaining its tail about the 260 mark very well. We have an engulfing bullish kind of formation getting formed on a daily scale today, and the OI additions are also on the positive side. So we are expecting that the stock could rebound back to say 285, 290 zone very quickly, and a stop loss can be placed somewhere close to 264, and longs can be deployed in JSW Steel. The second one is CEAT. Yes, the stock has been sliding, in a downward spiral for almost 2-3 weeks now. But if you look at the RSI, on the daily scale, there is a clear cut of a positive divergence which is getting emerged. If you look at the price formation as well, 1055, 1060 has been a strong zone for the stock. And with this particular setup in mind, we are expecting that in case if the stock manages to sustain about 1085 in a day or so, then probably the move can extend right up to 1130. So the reward to risk is very good out here. A stop loss can be placed around 1035 and longs can be considered in CAT for an upside target close to around 1135.
All right, gentlemen, just stay on with us. Bringing in a fundamental voice, G. Chokalingam of Economics Research and Advisory is joining us on the show right now. Choka, good afternoon to you. One stock that has made big moves in today's session, obviously on the back of the kind of news that's supporting it, is Emami. The promoters paring down stake, getting some money to reduce debt. Does that augur well with you?
I mean, theoretically, it's not good to see that promoter reducing it. Normally the investors, minority investors would like promoters retaining the maximum permissible limit of 75%. So therefore, I don't see any positive news on account of this development. And moreover, the stake sale is happening to settle the personal issues, financial issues, rather than for settling any company-related issue. So therefore, I am not enthused. And valuation also is not cheap even after the corrections. And we have seen, like even Britannia falling 20% in a short span of a couple of months. So I would still stay away from Emami.
Okay. Well, gaining well today is Emami. The question mark only is, can such gains sustain or can such moves sustain? I think that's what most people would be wondering. It's a proactive step and therefore maybe the market would like it. Mr. Chokalingam, the real estate stocks and the kind of buzz that they've had the last few days in the run-up to the GST Council meet, what are your thoughts on this?
We hold only Oberoi Realty, but again, still I am not bullish on the real estate sector because the kind of economic environment we are seeing in now. So unless the growth really improves close to 8% and many sectors start showing uptick, I believe real estate sector would be going through a lot of pressures, and therefore I am not bullish on the sector as a whole. Still, one has to buy. Then I would stick to relatively better stock like Oberoi Realty, which has got a very good balance sheet, maybe, and also DLF because of the potential in monetizing the commercial space of the company. So therefore, these are the two stocks one can consider for short to medium term investments.
Okay. Well, the stocks certainly are doing really well for themselves in the session today. Amar, maybe you gave a real estate stock as your idea, but I was just looking at the pack. The last few days have been very good for the likes of Oberoi and Prestige. And today's session, all the stocks are doing very well for themselves. Is there some merit in trying to take a trade on any of the names?
I would say looking at Oberoi Realty, yes, we've seen some consolidation and the stock taking out a very crucial resistance zone of 475 odd levels, because that was a crucial level of resistance. So that has been taken out. And looking at the stock from different, I would say, perspectives, the stock continues to trade strong. So any pullback in the stock towards, I would say, around 475, 480 levels can be used to build position with a stop loss below 470 and a target of 510 on the upside.
Okay. Well, let's wait and watch. 510 on the upside. That one is a bit soft today, but it had that 6 days of gains and therefore a bit of a cool off out there. What's also done really well today is Sterlite Technologies. A big sharp jump in this stock, 232, and in today's session at least, and trading very close to or at the high point of the day after days and days of getting pulled back because of this whole pledge issue and the corporate governance issues around the move by Vedanta. Sterlite Tech is for the day looking like doing well. Let's see if this lasts. The volumes too reasonably high today. Mr. Chokalingam, any thoughts here? Arguably that one Vedanta group company which is doing well fundamentally, but this overhang of the Vedanta action has weighed in. What should an average investor do here?
Vedanta, apart from the governance issue, right, it's also facing the problem of. Sterlite Technology has corrected a lot, and it has come out with decent results. So one can hold it on any small decline. Also, one can buy it. because the company has done phenomenally well in the recent time, and I believe it will continue to do well. So it's a good quality stock to hold.
Okay, good quality stock to hold. If somebody wants to buy a good quality stock, Mr. Chokalingam, right now, what would your advice be?
I mean, there are a lot. I mean, to be very fair, it's not only the stock which I cover, there are many, because the mid and small caps have lost about 26 lakh crore of market value from the last year peak. I would stick to two stocks from my coverage. One is Cyient Limited. This stock also down by 30% from the peak. And it is one of the cheapest mid-sized IT company. We have seen the kind of valuation Mindtree is enjoying, close to 2 times enterprise value to annual revenue, whereas this is close to 1 time. And so I like Cyient a lot. And second, Andhra Sugar. This is my pet stock because it has done phenomenally well even in the December quarter. It is basically into caustic soda and other industrial chemicals. Sugar is a very, very small business now, and it has expanded caustic soda capacity, set up a captive coal-based power plant. It has expanded aspirin capacity. It has set up some derivative units for using the chlorine. So many things are happening, and it is trading at less than 6 PE. For the last 25 years, Andhra Sugar has given dividend consistently, and it posted profits consistently. I believe that in the next 2-3 years, Andhra Sugar can possibly become a multi-bagger. So it also gives you a very good dividend yield. So personally also we have invested, and we have invested for almost all our clients.
Okay, Mr. Chokalingam, we'll leave it at that. Thanks so much for taking the time out and being with us today and giving us your thoughts. Really appreciate your time. That's Mr. G. Chokalingam of Economics Research and Advisory, talking about some ideas and some thoughts on specific pockets as well. By the way, speaking of stocks which are moving around, in the morning we were talking about how some of the corporate-facing banks the last 1 month haven't had a good run, the SBIs, ICICI banks of the world, and today they are amongst the top 6 gainers in trade. ICICI Bank a couple of percentage points, SBI about a couple of percentage points. Sacchitanand, would there be a trade here?
Well, certainly it will be ICICI Bank. In fact, the way the stock responded to its critical support zone of around 340, 4 trading sessions it did spend out there, and today we are seeing a positive price action. I think rather than betting on SBI, I would try deploy some longs in a stock like ICICI Bank. The stop loss clearly has to be around 340. The stock is quoting somewhere close to 345 right now. And once we see a rebound or a constructive move, the move can extend right up to say 365, 362 zone. So I think ICICI Bank remains a better flavored one, and probably this is a good time wherein longs can be considered.
Amar Singh, would you sell a Wipro at 364, and not just a Wipro, for that matter, an Infosys or a Tech Mahindra or an HCL Tech?
Yeah, looking at Infosys, I would say that we are seeing Infosys correct significantly, and but if you look at the long-term charts and even the weekly charts, Infosys continues to remain positive. And what's happened is that on the short-term charts, it's moved in oversold territory. And if you look at Infosys somewhere around 710, because the low that was made on 29 January was somewhere very close to that, and from there it had bounced back to almost 770 levels. So clearly reflecting that 710 odd levels is going to be very crucial support zone. So this is not a good level to short Infosys. So I would rather wait for Infosys. Yeah, I would rather be on the buying side for Infosys towards those levels.
Okay, just show the index once, because we are now off or almost 50, 60, 70 points from the highs of the day, and that is not a very good sign. The Nifty 50 has been dragged lower. Just want to see and pull out what are the stocks that have led the charge lower. So Wipro is at the lowest point of the day, 3% off, but about 1.5% in the last few minutes. Adani Ports is the other one. Bharti Airtel has corrected a little bit. ICICI Bank, we're just talking about it. It's off the highs. That's the key point. It was up almost 3% at a point of time. It's now up just about a couple of percentage points. So that one too. And amongst the heavyweights, I think HDFC and Reliance Industries are the other ones which have also corrected. So that's the that's the splattering of stocks that have pulled back, and which is why this Nifty 50 is looking right now the way it is.
I think IT, Neeraj, is a big, the entire basket of IT.
Yeah, they have been low throughout.
Has dragged it. Wipro is your top loser. Infosys is a heavy weight. TCS is a heavy weight. You've got all of these names down 2.5% to 3% apiece. So that's definitely going to have the kind of bearing that it has. And in fact, the Nifty is actually moving down pretty quick. So the index already now a 0.2% lower. So it's just a one-way drop on the index in the last few minutes of trade. I mean, it's not even gradual. It's just
very sharp.
It's just a cliff drop on the index. 22 points under now is what we have, and we were around 10,710 when the show started off just 15 minutes ago. So that's a big plunge that we are seeing of closer to 80 to 90 odd points on the Nifty now. And you've got just, I think, one stock in the Nifty IT, which is in the green. The rest of the others are all trading with heavy cuts. That's just one Mindtree that's got gains of closer to, I think, 1.5% on the Nifty. In fact, should bring up the Nifty MRR as well to just get a visual representation of what the advances are doing versus what the declines are doing on the index too, because I'm sure at this point in time the deviation in terms of the losses would be pretty stark, and there you have it. You've got TCS at the bottom of the heap now, one of the biggest weighted stocks on the index, and one of the biggest losses coming in there, 2.7% lower on the Nifty. Wipro, Infosys, IndusInd Bank, all of them looking extremely weak.
Yeah, it's certainly lost a lot of sheen, but essentially the culprits are the ones which have fallen the most in the last few minutes of last 30 minutes of trade, and that's where this set of companies, the HDFCs and the RILs of the world, feature right in. So looking slightly wobbly right now. The Nifty 50 flattened out completely. The option prices which have changed a bit, Sacchitanand, any thoughts here on would you want to rephrase your Nifty strategy, the bull call spread, or maybe take a fresh trade on the futures itself?
No, I think one should stick to the strategy itself. As we have seen, most of the IT names are putting a lot of pressure. But if you look at some of the banking names, they are still standing strong, and with the intention of a limited profit on the higher side, it's ideal to be with this particular spread. Probably the stop loss for the spread can be revised to 13, and I think still this particular spread holds strong. I don't think so we should venture out directly through futures, but I think this particular strategy should be prudent for next couple of trading sessions.
All right, gentlemen, just stay on with us. One more management to talk to. Sadbhav Engineering has just about managed to meet estimates in the third quarter despite execution falling behind target. The construction player is confident of meeting future targets, though joining us now to talk a little bit more about the company's performance is the Executive Director, Mr. Nitin Patel of Sadbhav Engineering. Mr. Patel, thanks very much for taking out the time. Quick highlights of the quarter gone by, and are you confident enough that you'll be able to maintain your key earnings matrices in the next quarter on the margin front, on the revenue front, on the profit front?
If we see the quarter, basically, obviously, it has grown almost closer to 10.5% as compared to the same quarter of the previous year. So we have executed around 925 crore of the top line. As against that, actually, what we would like to mention here that the projects which we have already started at the last week of December as well as in the quarter 4, so all put together almost around 3,400 crores of the new jobs has been started. So that will give the further add-on to the basically top line for the current quarter as well as the coming quarters for the next FY20 itself. So this is one point. Second point I would like to mention here that up to the Q3, when the execution was going on, 61% of our order book has not been started by the end of Q3. So as I have mentioned, once we add the 3,000, basically 400 crores of the new jobs, so definitely we will reach to again that almost around closer to 70% of the job basically under execution. So this will give the further basically uptick. So that is why we are quite confident that we will be able to mitigate our target of almost 3,800 crore of the top line what we have guided to the markets. And in terms of the margins, basically, we have also guided that we will be able to maintain at 12% EBITDA. So that more or less, even for the quarter and even for the entire 9 months also, it is being maintained. We are almost at the same time, same level. So that we are confident that it will be maintained because the orders which are there in the execution almost are the new orders. And that has been taken at the numbers, basically what we have determined considering these margin levels.
Okay, let's talk a little bit more about the order book position for Sadbhav Engineering within various segments of transport, mining and irrigation, and how do they stack up?
See, actually, if you see that the total order book for the company is all-time high as of now, almost we can say that it is 3.67 times of the FY18 top line. So as of now, we are standing at almost 12,870 crores basically. And if we divide the same, the transport sector contributes around 10,092 crores and irrigation is 512 crores. So it is depleting. Only the one new job has been started around 160 crores. And another thing, mining, we had outstanding order book was 2,267 crores. So in mining also almost around 1,600 crores of the new jobs has been started in Q3 onwards actually. So this quarter onwards, we will have a further basically growth basically in the mining execution over and above the highway sector.
Okay. What's the guidance, Mr. Patel, that you can give us about how maybe FY19 as a year in terms of actual numbers or FY20 in terms of percentage growth numbers could look like?
See, actually, what we have guided to the market that this year will be able to reach around 3,800 crores of the top line. And for FY20, because another 4 projects are going to be started in Q1, and because already 100% of the order book will be under execution in Q1 itself. So considering all these things, we have basically guided that we'll be able to achieve minimum 20% growth over the FY19 numbers for the FY20 with the same number of the EBITDA what we have basically stated.
Okay. We'll leave it at that, Mr. Patel. Thank you so much for taking the time out and being with us. All the best for the quarters ahead. That's a view from Sadbhav Engineering on their numbers. Just a quick thought from Avinash Gorakshakar on this before we take that break. Avinash, good having you. Thanks for joining in. EPC companies, selectively look at it. Do you look at Sadbhav at all?
My guess is, Neeraj, I think probably, the execution has to be much faster. I think clearly the order book of 12,000 odd crores is definitely a very attractive and a positive fact as far as the run rate is concerned. But I think clearly the markets is looking at some sort of a faster execution kind of track record. I would believe that at least till the time the elections don't get over, there are many clearances which these companies require to get from government agencies. And I think probably, the third and the fourth quarter of FY20 would be much better. So I think as of now, I don't expect that these numbers could possibly re-rate the stock or possibly could be a good buying opportunity. It's better to wait and probably, look at possibly some more execution kind of, checklist possibly for the quarter or two.
Okay. Stay on, Jaman. So much more to talk about. We should be hitting that break now on the note that the index has flattened out completely. The Nifty Bank is trying to hold it up, but a clutch of names, including the IT heavyweights, and the likes of HDFC and RIL are dragging the index or keeping a lid on the index move. Take a break. We'll come back and talk more with our experts. Also get the Fab 4 stocks of the day, what dealing rooms are recommending a bit later on at 3:15, and then some closing strategies. As we hit that break, hear out Nishchal Maheshwari. He speaks about how the year 2019 is going to be an interesting year for the Indian economy as well as the financial markets, given the upcoming general elections and several global events.
There has been a lot of talk basically about the real estate sector, and everybody in the industry is expecting GST rates to come down from 12 to 5%. I think that's what the market is also reacting towards. Given that the sector is down in the doldrums for almost now 5 years, I believe some amount of relief is definitely called for. That will obviously bring down the prices of the housing sector, which is, once again, if you really look at it, new sales are pretty much at the lower end. So I think that should be a welcome relief to the whole sector.
All right, that's on real estate. Last 7 days, Nishchal, have been particularly I wouldn't say brutal, but it's not done much for the Indian equities. In fact, we've seen quite a divergent move to what the rest of the Asian market pack has been doing. Do you think the overhangs that we have in terms of the bigger market moving events are weighing down on sentiment right now, and people are taking a slightly more cautious stance?
Seems to be basically, if I compare that most of the other markets, especially on the emerging market side as well as on the developed market side, if I look at from January till now, most of them are up by around anywhere from 4 to 10%. And India on the other side is actually down by 2%. So I think that seems to be a clear divergence. And this time the divergence is negative basically, and we are seeing worries about the coming election, given that there is no certainty around it. That's why you are seeing this kind of divergence, and we do not see any fresh investment, especially from the domestic side, because we continue to see good amount of investments coming from the emerging markets, given that the emerging market has got almost close to $20 billion across the world in the new year, and India has got its share based on the MSCI weightage. I think domestics is where I think the confidence is lacking.
High frequency sectoral indicators, and what do you think they suggest, if anything, or if there are opportunities out there? I think we're forever waiting for capital goods to do what they do, so let's leave that pocket out. How are you approaching autos currently? What has been the house advice to clients who either have large positions in autos or who are thinking of doing that because the valuations now seemingly are a lot more appealing?
So our our house call has been basically very defensive. I think for the last 3 months we have been advocating defensive positions. Now autos, we have to be careful saying that what is defensive within autos. Definitely not the CV, because that is largely more of an economic cycle player. Cars also, we were positive till I think mid of December, and then we had a conference where most of the dealers said that their demand is definitely much down. So we have turned negative on the four-wheelers. So two-wheelers is where we believe there is a good valuation comfort, given that most of them are trading at around 5.5 to 6 times EV to EBITDA, which is more or less close to any other commodity player. So I think two-wheelers looks to be in a good position at the moment. Hero Honda, Bajaj Auto, Eicher Motors. I think you can take your pick, but our pick is Hero Honda, given that it's more of a rural play. I'm saying relatively within the two-wheeler, it's a larger rural play. And again, given that the government focus is also for the moment, given that this is an election year, is going to be more on the rural side, I think one should look at the two-wheeler space, and within that, I think we prefer Hero Honda.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out there. There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We're getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
welcome back. You're still with Countdown, 25 minutes left to go for market closing. And just quick look at the index. We're now at the lowest point of the day, and the fall has been pretty quick and pretty sharp on the Nifty, from being up about closer to 90 odd points, 95 odd points in trade earlier on. We're now down 30 odd points. So that's a steep drop that you're seeing on the Nifty. The banks have also given up, but they're still managing to hold afloat in the green by 1/4%. That's the bank Nifty for you. Mid caps and small caps should just pull up the broader market space as well to see whether or not the gains have reversed there. So still holding up by about 0.5% on the Nifty mid cap. Nifty small cap is up just 1/4% right now. Europe, as a pocket, just quickly, as we can see, has been under some stress in today's session. So trading with losses of about 0.5% for the FTSE 100. CAC's down about 1/3%. DAX also looking weak in the session. And yesterday's session in the US, there was no trade because of Precedence Day. You're probably going to see it open up for trade today. Dow futures indicating a negative start, about 0.25% or lower for the Dow futures. Avinash, Gorakshakar of Joindre Capital Services joining us on the show right now. Avinash, good afternoon to you. What have you made of this sudden drop on the index? Up until just an hour ago, it was up closer to more than 0.5%, and now sudden dip, IT dragging the index lower, and the heavyweights like Reliance Industries looking extremely weak.
I think clearly, Devina, this looks to be a fallout of the kind of developments the market is expecting again from the Cobra post, which is going to come out today. Although it may not have any material impact, I think markets are clearly edgy and obviously afraid that any negative news flow as far as any corporate name again comes out, it could possibly trigger another sell-off. Broadly, I would believe that clearly the markets had shown a very strong directional trend in the first half. My sense is, I think clearly the markets would like to evaluate whether something meaningful comes out of this meet. But otherwise, broadly, I wouldn't be surprised that tomorrow's move could possibly actually make up for the kind of fall we are seeing in the index as of now.
No, sorry, what are you saying? You're saying that tomorrow there'll be an up move which will make up for the fall today.
Hopefully, if nothing materially comes out of that Cobra post news conference which is there at 3 p.m. today.
Okay.
Actually, most of the market people whom I have spoken have told me that that is probably the reason the markets actually started tanking around 230 odd. I mean, the exact content of this press invitation is not known, but clearly any negative surprise, like last time Diwan housing names came out, Neeraj, and I think we saw a huge sell-off post this conference. So I think clearly, whether it's right or wrong, I think the markets are definitely liking negative news flow more at this point of time.
Certainly are. By the way, as we speak, TCS is down about 3.5%, and that is, quite steep. This is more than what's, otherwise it's largely been okay, but the last 2 or 3 sessions, the last 7-day move for TCS has not been very pleasant. It's dropped about 7.7% over the last 7 days, largely over the last 4 trading sessions. So it's been a strong drift lower. I'll get a technical view here too, but a fundamental view, Avinash. What's the pressure on large cap IT the last few days?
My guess is, I think most of these stocks had performed quite well, and I think again with the rupee now turning a slightly on the upper side on appreciating, I think the markets are clearly looking at some sort of profit booking. I would not be surprised, Neeraj, from the large cap HCL Tech, TCS, and within the smaller companies, Tech Mahindra. I think these are companies which are going to show meaningful, strong earnings growth, for the next couple of quarters. The US market has now shown positive headwinds. And my sense is that these companies have definitely got a lot of cash on their books. The cash has also been started being using in a very productive manner. They have also realized that by providing buybacks and giving dividends, this is one way where possibly valuations are now not going to go down. So probably lower levels, probably it's a good time to accumulate these stocks, because clearly from a longer term point of view, the US market turning around is going to be beneficial for most of the larger players.
Okay. Well, but the charts the last few days are showing a different story. Amar Singh, what about TCS in particular?
Yeah, looking at TCS, I would say that the long-term charts still look positive for TCS, but over the past few trading sessions, specifically 3 trading sessions, The stock has corrected from 2050 levels to currently trade around 1900 odd levels, and there is a possibility that the stock could find some support around 1850 odd levels, because that was where the stock had consolidated. If that is taken out, then it could head lower towards the 15th Jan low of 1800, 1808. So 1800, 1850, that's a very crucial zone of support. So there the stock could get some respite and we could see some consolidation. However, as I said, the long-term trend for the stock remains still positive.
Okay. But certainly the short term looking slightly wobbly is TCS. By the way, TCS, Wipro and Infosys are 3 of the top 4 losers on the Nifty 50 right now. That's where the larger pain is. I just want to see if the market breadth has crisscrossed or whether this is only a dump on the Nifty. By the way, the Nifty Bank too is now just about 0.2%, so keep that at the back of your mind. The market breadth still in the positive. A lot of stocks correcting. Kaveri Seeds, Avinash, this 10-11% fall that's happened.
I think, Neeraj, clearly here the fall has been largely driven not only by the poor performance of the company, but some corporate governance matters. In fact, in the conference call, the management did not clearly highlight this fact to the exchanges that their license was suspended from Andhra. So I think clearly, the markets are punishing such corporates, and I think obviously the loss of business is going to obviously impact the company in the coming quarters. So I think clearly the markets are disappointed, whenever these managements don't actually disclose material developments. I think the stock definitely takes a beating, and I wouldn't be surprised that at least for say 1 or 2 quarters, it would take a long time before confidence builds back here. Okay,
that's the one thing. The other thing is the kind of moves that we are seeing. Well, actually, Imami is a no-brainer of sorts. The kind of gains that we've had today, it's 15% higher. So that stock is well understood. The other one, Avinash, is the kind of gains that we're seeing in, say, for example, Praj Industries, back 6.5%. Is it this buoyancy in the sugar stocks which is leading to Praj also moving higher? Or do you think Praj will show a trajectory which is different to the kind of buoyancy that we're seeing in the sugar names?
No, I think clearly, the story in Praj is more to do with the ethanol story, and I would believe that, since Praj is one of the players which actually enjoys a very large order book as far as the ethanol manufacturing capacity is concerned, I won't be surprised that, even at these levels, Neeraj, there could be some good value buying. In fact, the Q3 numbers have been pretty strong, and I would presume that with more and more ethanol capacity likely to come up, Praj is definitely one of those players which is going to benefit going ahead.
Okay. That stock, the other stock that for the longest time was very stagnant is Hathway Cable. The last few days it's come off, but if you look up the 6-month chart of Hathway Cable, you will see that for a really long period from when Reliance announced that intention, the stock was extremely flat, static, no moves whatsoever since mid-October when the announcement came in. In the last 2 days, Hathway Cable has dipped and dipped quite strongly. In today's session, more so, 7.5% lower. Difficult to maybe get a chart check out here. Let me try. I want Avinash to give a fundamental view, but a chart check out here, Sacchitanand, on a Hathway Cable.
Well, certainly from a technical point of view, we cannot evaluate it. The volumes have been very inconsistent and the price action has been very restricted. So probably, the way the price has been behaving right now, I won't be surprised if we see lower levels close to around 21 very quickly.
Avinash, what about you? Fundamentally, these companies, essentially subsidiaries of Reliance per se, the stock prices have come off. Is it got to do, why this sudden move downwards?
No, in fact, Neeraj, as it is, if you see their business model, that was under threat when Reliance, launched the fiber to home product. My sense is that, whatever incremental gains are going to come in is purely on the back of what expansion plans Reliance announces for the fiber to ground, because until the fiber is not rolled out, the strategy is to use their network into ensuring that more customers come in their basket. So I would believe that, from an operational fundamental perspective, it's better to stick with Reliance rather than buying into these smaller names, which eventually I would believe that sooner or later these companies could definitely could get merged with the parent company, that is Reliance.
All right, that's Hathway Cables down about 8%. Reliance Industries in the red now by 1/3%, and the Nifty on the brink of breaking below that 10,600 mark. In fact, I think briefly broke it, came back up. But it's time now to take a look at what dealing rooms are recommending. Yatan Mota and Darshan Mehta, both of them here with their channel checks. Darshan, what have you been picking up?
Yeah, so basically some of the stocks that have been spoken about, at least the first stock that's spoken about is Ujjivan Financial. It's up almost 1.5%, but what I hear from a couple of dealing rooms is that at higher levels, some of the HNIs are actively squaring off their positions. It's managed to rebound over the past few days, so that's the first stock that dealers are talking about. The other one which has managed to move up is Nalco today. It's moved up almost 4%. The Bharat 22 ETF is off now, and there is a lot of domestic funds that are accumulating based on the valuation. Remember, Nalco has already corrected from levels of as high as 85-90 to levels of 50. And finally, Interglobe Aviation is looking slightly weak. Some of the domestic funds have been sellers in the counter, is something that dealing rooms have indicated. But Yatin, what are you hearing?
Darshan, IT stocks will be in focus. Few days back also we had said that a lot of fund selling is happening in IT stocks. Today, TCS and Infosys, all of these stocks are down, 2.5%, 3.5%. So the IT stocks are something wherein dealers indicate that there could be some FII selling which could continue here. So, they are expecting some downside here as well. Balrampur Chini and sugar as a pack is doing extremely well in trade. Dealers again indicate that a lot of HNIs are buying sugar stocks, as far as the sectoral view is concerned, given the fact that international sugar prices are also moving up. And finally, SREI Infra, that is also one stock which is witnessing some short covering in trade today. And based on F&O trends, dealers do expect the short covering to continue here.
All right, that's what dealing rooms are talking about this afternoon. About 15 minutes left to go for trade right now, and below 10,600. I think this is quite a pacey drop on the index right now, 10,589, and dropping really quickly at this point. 0.5% already given up. So a lot of shorts being built into the system now. You wouldn't even say that it's long unwinding, because the last 7 days have not been seeing any longs into the system. There's only been a matter of shorts that have been piling up in the system. And the last time that we spoke about it, it was the 10,700 put option that had the maximum open interest, that was providing that support, but that too has been taken off in a big way in today's session. On the upside, 11,000 still holds fort with regards to the upside resistance, but I believe that the resistance will slowly and gradually start to shift lower from those levels. Sacchitanand, anything that you have spotted in the last half an hour of trade and the kind of moves that we've been seeing and the drop that has come about at this space?
Well, currently the entire pressure is created by the IT space, and probably Wipro is one stock which has managed to breach the support level around 368. So probably some short positions can be deployed here on the futures. It is quoting somewhere close to 360, 350. A stop loss for the trade should be placed around 370, and probably we may see this move getting extended right up to say 355 or so.
Okay. Yeah, it's just wobbled now quite a bit. The Nifty Bank, as we speak, is into the red as well. Amar, this was the strongest looking index. We spoke about Nifty strategies. What about a Nifty Bank strategy?
Yeah, looking at the Nifty Bank also, I had said earlier that higher levels could be, there could be selling pressure. And also technically, if you look at both Nifty Bank and Nifty on the short term basis, there is selling pressure and the trend remains down. However, it's in oversold territory and close to crucial support zone. So if you look at Bank Nifty, somewhere around, I would say somewhere around 26,400, 500, that's a crucial support zone, because that was the low that was made on 29 January, somewhere around those levels. So, but I would say that higher levels will be sold into, and till the time Bank Nifty does not consistently trade above 27,000 mark, we could see selling pressure in the stock, in the index.
Okay. Well, it's certainly looking tough. Maybe get in closing strategies right now only as we speak, 0.5% lower. Amar, you want to come back to you, your top closing strategy?
One can look at going short in IRB Infra, because this is one stock, if you look at it technically, the stock continues to be extremely weak on the long term as well as the short term charts. So currently it's around 112, 113 levels. So any pullback towards 115, 116 ideally can be used as a shorting opportunity with a stop loss of 121 and a target of 107 on the downside.
Okay. What about you, Sacchitanand?
Well, I'll stick to ICICI Bank. In fact, the reverter risk out here is very sweet, and it is quoting somewhere close to its support zone. So 340 should be the stop loss for the trade. Expecting that this particular stock may revive both the indices higher. So target on the upside from BTSC perspective rests at around 348.
Okay, watch out for these names. The bunch of stocks which are having this serious pressure. Kaveri Seeds is just one example, but at the BSE small cap space, a clutch of stocks have fallen apart too. But in the more liquid universe as well, there are companies which have some serious pressure going on. Avinash, if the GST Council does decide in favor of tinkering the GST rates to what the industry really wants, is that something that will lead to that dramatic a change in business that the stock should react so much?
My sense is, I think, if the GST rates are reduced, I think obviously there could be a sentimental change, especially, if you look at sectors like building products, affordable housing. I think these are names where, obviously the GST has been a slight impediment, in incremental demand. But it may not immediately, improve the outlook. But overall, I would believe that longer term, a lower GST rate could actually help, housing finance companies, typically, projects which are incomplete and where the GST is at a higher level. Even building product companies like, let's say, a Kajaria Ceramics, which has got a very strong correlation to the affordable housing market. These are stocks which possibly could see a little bit of a bump up based on the fact that, this could be a small sentimental move now. But earnings to accrue from this development, Neeraj, would take some time.
Well, yeah, let's wait and watch. I think a lot of builders have been saying that there is also this whole dichotomy of what happens to the input materials and the GST there versus the GST here. So complicated issue anyways, we'll get to know about it tomorrow. For now, while the markets has buckled down a bit, some of these stocks continue to rise and shine. Avinash, you must be happy. Sterlite Technology is up 6.5% today.
I think, Neeraj, it's fallen from almost 300 odd levels.
398 actually.
Yeah, 398. No, I think clearly, Neeraj, the fact remains that, the pledging factor has been largely responsible for the downfall. But I think from this level, if somebody were to invest for the next 2 years, I would be quite confident to say that, they have a business which is going to grow from strength to strength. And clearly with the 5G rollout now expected in FY21, you're going to see a lot of technology changes, and plus the kind of order book they have. I would not be surprised that once the market settles down and we see a proper directional call for the market, these are companies which are going to actually reward, investors with hefty rewards, provided they have the time and the patience.
232 and counting in the session today. Sterlite Tech, a bit of a bounce for that stock. Today, GVK Power has bounced back. It's a penny stock, but was very active the last couple of days, so need to point it out. And Nalco and SAIL today have moved up too. What happens here, Avinash? Nalco, SAIL, these PSU metal names, which largely have done okay on the fundamental basis, but some of the stocks have gotten dragged down because of all that's happening around the world in the metal space, any which ways.
My sense is, I think, I think SAIL has done remarkably well. If you see the Q3 numbers, volume growth as well as margin improvement was quite evident. And I think clearly, if one were to take a longer term call, I think the downside for the stock would not be significant, Neeraj. I think the stock has already corrected from odd 60 odd levels. So I would believe that, compared to a Nalco where alumina prices still continue to be weak and probably for the next 1 or 2 quarters may remain under pressure, SAIL definitely has a better positioning considering that they are an integrated plant. And most importantly, if somebody takes a longer term call, I think once the metal prices stabilize, I think SAIL at these levels could give a decent risk reward.
So you would be in favor of buying a SAIL?
At these levels, yes. I mean, clearly from a longer term horizon.
Clearly from a longer term horizon on these levels, yes. Okay. Well, that's the view from Avinash Gorakshakar. Avinash, you usually give us a name or two that you would want to get into or buy into. What is it that you like?
Neeraj, as of now, we would like to recommend some frontline names from the corporate lending banks, specifically something regarding Axis Bank. I would believe that post the Suti sale, we saw a fall in the stock price, but the stock is consolidating at the current odd levels, and our sense is that looking at the kind of incremental kind of business growth in the coming year, plus the kind of headwinds which you are seeing in the corporate lending segment, I would not be surprised that this is one stock which could possibly be a good outperformer over the next, say, 6 to 12 months. So I think Axis Bank definitely could be a good choice, considering that the market is volatile and this could possibly stand out in this market.
Okay. Well, the other one which is, I think, just bounced back, if I'm not wrong, is Welspun Corp. Can we pull up that stock? Unless I'm wrong, there's a bit of a move. No, it was a strong stock any which ways, so I stand corrected. But the stock has done well for itself, and that's the key thing Welspun Corp has. So good move there for this stock. Stocks which have done well in the last few minutes include SL Propack, which has bounced back into the green. It was marginally in the red a few 15-20 minutes ago, and now has just had a bit of a shoot up. Supreme Industries, again a bit of a shoot up. Indo Count, which has gone down a number of days in the past, has done well. And AB Fashion, on which there was a brokerage note from Goldman Sachs, again was in the red, is now in the green. So a bit of a spike out there coming in for AB Fashion as well. Anything on the chart, Amar, for these names, SL Propack or Indo Count or AB Fashion?
Yeah, looking at Indo Count, we see that it is forming some sort of base around the current levels, but I would say that the trend remains extremely bearish. So there could be some temporary respite, but higher levels would be sold into. And the same I would say with AB Capital also, because if you look at AB Capital, what we are seeing is that the stock continues to face pressure. However, there's some consolidation around 78-80 levels, but technically I would say it continues to be extremely weak on the long-term charts. So what is likely to happen? Any pullback will be sold into, and the stock will go in for some consolidation.
Okay. We will just start wrapping up the markets in just moments from now. Just before we do that, Avinash, one final call for non-risk averse investor, somebody who's willing to take a bit of a risk. Does Yes Bank provide an opportunity?
Neeraj, I would definitely look at buying the stock, considering the fact that the RBI diligence issue has now been completely cleared. I think what happened post this divergent letter being exposed to the exchanges was definitely a setback. But overall, if one were to take a call for the next 6 to 12 months, I would believe that we could be looking at levels of 250, 260. I think now the clear signal for the market from the market would be that they would like to see stronger kind of performances on the fundamental side, and what kind of commentary comes in from the new CEO. So I think clearly at these levels, most of the risk has been taken out, and I think one could definitely look at buying it.
Okay, Avinash, we'll leave it at that. Thanks so much for taking the time out and joining us. Really appreciate your time and being with us today. Request our technical experts to stay on for some final thoughts. But here's how the markets are shutting shop. And well, the Nifty 50 is ending about 1/3% in the red. The Nifty Bank, while optically ending flat, has lost about 0.8% in the session today. So that's a reasonably deep gash that we've seen in the Nifty Bank intraday as well. Mid caps and the small caps ending in the green, but again off the highs of the day, the market breadth too contracted a little bit. Devi will speak about all of that. Let me just talk about what the large caps have done in the session today firstly. So the likes of Vedanta and the metal names, so Vedanta, JSW Steel, etc. have had a good run. Grasim up about 3%. OMCs, BPCL in particular has done okay, and Z continues on its merry way, so up another 1.5%. Eicher Motors has had some gains, as is M&M. So select auto names have kind of done okay, but IT's been taken to the cleaners. Wipro, TCS, Infosys, all of them lower. Amongst heavyweights, the likes of HDFC in the red as well. Reliance doesn't make it to this list, but I'm sure it is in the contributors list because that stock too has fallen. It would be, I reckon, TCS, Infosys, HDFC and Reliance Industries as the top contributors on the downside. So, well, fair degree of disappointment, predominantly coming in, as I said, from IT and maybe Reliance and HDFC. But if this was a picture in the large caps, mid caps and small caps, Devina, ending in the green, but the market breadth narrowing towards the close.
Well, it has, but a 0.5% gain on the mid cap and the small cap index, in a market which is falling 0.5% is not a bad thing at all by close. Start off with a few movers on the index. Start off with Kaveri Seeds, the losing end of the market first off. The quantum of losses barring the top few losers on the index is not all that high. Kaveri seed for one was down 13% at the start of the show when we started to take a check, and right now the stock is actually lower in the session by about 9.5%. Hathway Cable is the other one. That stock loses out in the session about 8.5% lower on at 25. Reliance Power loses some more steam. L&T Tech is the other one that looks weak in the session. Reliance Power is down 4.5% by close. L&T Tech. Dish TV is the other one. Profit taking on the counter last few days has been particularly good for the counter, and some profits off the table. Equitas and Adani Power are the other two names which look weak in the session. Imami, on the back of its stake sale, promoter holding coming off, they're looking to pay debt. The stock is actually not doing all that badly. Towards the end of trade, Imami closes with gains to the tune of 12.5%. Welspun Corp is another gainer. Sterlite Tech had a good day today in the session. Praj Industries and most of the other sugar names had a decent gain in today's session compared to the rest of the market. So Balrampur Chini also from that pocket doing okay for itself. The rest of the pocket, that's a real estate space, is also in focus. So a DLF for one within the real estate pocket was up 4.5%. Godrej Properties is the other one that you watch out for. And not just that, even the smaller names, the Prestige Estates that finally would see a close in the green by about 2.5%. We started off the day with 4%. I think it's maintained those gains, dipped a little bit, and then come right back up at the top. So that's what you've got. The real estate pocket, which is active, sugar pocket, which is active, and amongst the losers, it's the IT pockets that's dragging the index lower, particularly.
Yeah, that's interesting. And let's wait and watch if these moves continue to tomorrow's session when the GST Council meets. But the turnover should come up on your screen. That's the interesting part. We know that the market has converged, but the turnover today's session, the F&O turnover certainly high, the cash turnover not so much.
Right.
Actually very low.
Yeah, it's below yesterday's 26,000 odd crore mark as well, just about there. So cash market figures are dwindling over the last few days. Let's take a look at the contributors then on the index, the Nifty contributors, and IT and HDFC, IndusInd Bank. Heavyweights in the banking and the IT space dragging the index down quite sharply. What's probably held up is an L&T, which has gained about 5 odd points, and ITC and SBI doing okay for themselves, but not being able to maintain the momentum and maintain the Nifty being in the green.
Yeah, that too. And of course, the other bit is what's happened to the market breadth, which tried to converge towards the close. Didn't converge exactly, but did come off from the levels that it was at. So 3:2 from 2:1 in favor of the advances. Final thoughts from our experts then, and Sacchitanand, to you first. What does this do? A strong day gets sold into as well. Do you reckon there's a higher probability of we heading lower from where we are right now?
Well, Neeraj, in fact, very tricky. In fact, if you look at the 60-minute scale, there's still the 3-point divergence is holding strong. Yes, from a trading perspective, in case if we see a positive closing tomorrow, and in case if Nifty defends the 10,640 mark in the initial part of the day, then probably we may see a strong respite coming back in the market. But on the lower side, I think 10,580, which is a very critical zone, and in case if we slip below that particular low in tomorrow's session, then probably this particular fall may aggravate towards 10,400 very quickly. So it's a very tricky situation. In fact, tomorrow's opening will be very critical, and that's why we recommended participating this particular move through a strategy and not directly with futures.
Okay, Amar, what about you?
I would say that one definitely needs to be careful on the long side because Nifty is around very crucial support levels, and if you look at Nifty on 29 Jan, it had made a low of 10,583. So somewhere from there it bounced back. Again, it's almost at the same levels, and technically the short-term trend remains extremely, I would say, negative. It is in oversold territory, so that's one advantage. But I would say that higher levels will be sold into, and I would say that breaking or breaching the 10,580 mark could lead to some sharp sell-off in Nifty. And only above, consistently trading above 10,780, 800 levels, then one can be reasonably sure that Nifty could inch higher or trade higher.
We'll leave it at that. Thanks so much for taking the time out and being with us, gentlemen, both of you. Appreciate your time. With that, it's a wrap on this edition of Countdown from Devi and me. Thanks so much for watching. And we come back with the market wrap in just moments from now. Stay tuned to Bloomberg Live.